Hi there, it's Bill with Smart Trades, and it's Monday, October 11th. It's around 5:30 p.m. and just wanted to knock out a quick video. Uh, First of all, I wanted to review my analysis from I believe it was October 5th, and at that point, I had noted that the market, I had hit our target, uh, but breadth was quite good, and so I was expecting somewhat higher prices in the short term and then looking possibly at selling a test of this trend channel against a backdrop of weaker breadth. Here's how the market has panned out. We've actually had some pretty severe breadth divergences, and indeed the market has gone up and tested this trend line several times, and on each time it has not been confirmed by the advanced decline line. And to my way of thinking, that's generally a bearish case scenario. That said, it wouldn't shock me if we go a little bit higher, and I had mentioned, I believe, the 1130 area on the Dow. Actually recalculating, that should be up around 11,043 should be the target on the Dow for our A equals C. Anyway, here's a close-up of those tests of that trend line. And again, here's the advanced decline line, which has made lower peaks, not necessarily consecutively, but on each of these tests of the upper trend line. One of the things that I use to determine when I'm wrong, basically, if I call a peak and I get an ABC style decline, and then I break out above the market breaks out above the B wave. To me, that's a red flag that we're going to make new highs. And basically, my philosophy in this kind of scenario here is to, when we get up into this trend line, is look for downside momentum to get short into, but then as quickly as possible bring the stops down to break even if possible. And with the futures, it's a lot easier to do sometimes than with stocks or with ETFs, but that's what I like to do in this kind of a case. And again, as quickly as possible, bring stops down or bring them to break even. But these tests have been, so far they haven't produced any significant movement, but indeed that's held the market. Here's our longer term picture, and this is a picture of the Dow, obviously, and again, my recalculation of that A equals C. Oftentimes I will just use the trend line tools and get an estimate, kind of get a round number, and it's A equals C is actually, I believe, around 11,043. Today's high is just around that 11,030 level, which was actually where I was talking about, I believe, on the last Dow videos. And also, I bring your attention to the possibility that we actually have 5 waves up. I do believe that this is a C wave rather than some kind of a zigzag or whatever, because it's just very steep. It's got, even though it's not an ideal pattern on the hourly charts, it does have a classic extended third wave, and short first and possibly fifth waves, but we shall see. And again, here's that parallel channel. It all fits in around that 1140, maybe up to 1170 area. Excuse me, 11,040, 11,070. And here's a close-up again of that wave count and that the A equals C target, as well as that 11,070 area, which is also the parallel trend channel. Oh, let me back up one thing. Also, breadth. In addition to breadth, volume and momentum are also fading against this rally. So all of these things tend to make me think that we're peaking. Again, as I said before, if we start blasting through the top of this channel and we start confirming volume and breadth, I would possibly change my tune. But at this point, I'm still bearish, but somewhat a patient bearish, shall we say. Here's the Dow on an hourly basis, and here's a close-up of this last wedge up and the advanced decline line. Not only are we diverging, compared to this previous leg, but even the last leg is diverging. So you've got divergences against, basically every leg up, every new high on all magnitudes. And generally speaking, that's a very bearish type of pattern with the advanced decline line, and particularly given that we have a possible termination count up here. One thing I'd also bring your attention to, in each of these are the previous intermediate swings along with their ideal targets. In each case, there is a margin of error of about 0.6%. So right now on the S&P, for example, we're about 1% above my 1157 target. But I think you have to look at these with at least give them, you know, a 1% margin of error, perhaps a little bit more than that. And the main thing here is form rather than hitting a number right on the nose. So again, 11,043 to up to maybe 11,075 is the range to be watching here. And I think we are going to go a little higher, but we'll have to wait and see. Here again is the weekly chart, and sometimes it's good to sort of step back and you know, the hourly counts have been very, very difficult. But here, if you look at the weekly Dow from the late August, early September low, you can clearly see the 5-wave pattern: 1 up, 2 down, 3 up, 4 sideways to down, and we are possibly again in a 5th wave up, and that approximate 11,043 level just overhead. You know, so it's a nice looking pattern. We'll see how it actually works out. And lastly, here's the hourly NASDAQ along with the NASDAQ advanced decline line. And again, you can see that wedge formation. It wouldn't surprise me to see us come down and test the bottom of this wedge and then go up perhaps to the 2050 level basis the NASDAQ, which, by the way, would be right up near the April highs and sort of the ideal target for a B wave in a flat, which, you know, again, I've discussed in previous videos. I'm not going to get into it and stretch this one out, but the bottom line is that a moderate new high with continued, and this is the key, that the breadth continues to not confirm that we have bearish divergences on the advanced decline line. I'm looking to sell these tests of this trend line up here. If it blasts through, if the breadth starts going through these highs and making new highs, obviously we'll reconsider. And as always, I'm looking to get some kind of price confirmation before I look to sell. Anyway, hope you're having a great day, and I'll talk to you soon. Bye-bye.